Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. I wanted to just thank everybody for their very kind comments. And Port Power from YouTube said that the cheat sheet has been so valuable for me, getting to know the intercorrelations and interconnections. And Josh, doing music, also said I'm really benefiting from the new style of the recent videos. The quickfire analysis on all the daily charts is reinforcing everything, and it's giving me a confidence to do my own analysis by comparing it with yours. I'm getting a better idea of how I could take advantage of market movements. This is just fantastic. I'm going to give you new insights into the cheat sheet in this video. We're going to look into the cheat sheet and to discover and understand better row 1, row 2, row 3, row 4, row 5, row 6, and row 7. It may sound a lot at the start, but you'll get used to it very, very quickly, and you'll understand the weather forecast of the financial markets. Let's get into it and let's run the numbers. You can get the cheat sheet absolutely free of charge by going to CTKSMethod.org. All you need to do is just to scroll down on the specific homepage and just get down to your cheat sheet to Mastering Price Action. You can just download this one free. Inside the service, we look at the cheat sheet from a quite advanced perspective, and there are different videos inside the service to help you to practically apply the structural levels across all of the analysis. In the daily videos, we're doing something a little bit different. I'm just giving you the high-level perspective of looking through row 1, row 2, row 3, row 4, row 5, row 6, and row 7. It's an incredibly useful thing to do to understand where the markets could likely be heading. I put this analysis together for you because I just want to explain how the different rows cross-correlate to each other. For example, row 1 and row 2 both measure risk. The risk that row 1 measures is typically the VIX and associated cost of money and forex pairs, as well as inflation via oil. Row 2 measures risk in a slightly different way. The VIX and junk bonds typically invert each other's behavior. The DXY and the USD JPY typically invert the euro dollar and the Aussie dollar. If the yields are coming up, such as the US 10 and the US 2, depending on if there's geopolitical stress and problems, gold is probably getting hit and silver is getting hit. For example, if the DXY spikes up and the US 10 and the US 2-year yields spike up, in the absence of geopolitical problems, and there's quite a lot of those at the moment, gold and silver will actually go down. And when we look at something like copper or Dr. Copper can measure economic activity. So row 1 and row 2 are very much about where the risk is inside the markets. And it takes you many decades to understand that you really need to look at these specific charts because they'll move your chart. That then takes us into row 3. Row 3 is vitally important to understand. They're all about the main markets. Now, when the main markets go down, you can bet your bottom dollar the individual stocks are coming down, and crypto is in all likelihood coming down too. If Bitcoin comes down, total crypto market cap is likely, well, it's going to come down too, there's no question about it, which means row 6 and row 7. So for example, row 6, Litecoin, Bitcoin Cash, Ethereum Classic just move in alignment with row 5. Now, a lot of people say, oh, Ken, I'm not interested in cryptos. I've heard that's rat poison squared. Well, yeah, maybe if you're 100 years old and Warren Buffett, but if you're a leading fund manager, Bitcoin crypto is here to stay, and you're already selling it, flogging it to your customers. And there's something else to consider. When you look at Bitcoin and total crypto market cap, they trade 24 hours a day, 7 days a week. Wow, 365 days a year. No rest for crypto. But what about individual stocks? Oh boy, they are so lazy. They're only open when the main markets are open. Now, what if you get caught as a lot of people have got caught over time in a market meltdown where everything is just dying. When you're in crypto, you can do something about it at 2 a.m. in the morning if you wanted to. Can you do that with individual stocks? Can you do it with indices? No way. You just can't do it. But there's something much more important about the crypto market. It is much more volatile than individual stocks, than Forex, or the major markets. Now, what does that mean? Volatility is how we actually make a percent return. Inside the stock market, if you were trading around COVID, for example, around the pandemic, you would have seen that it took an eternity for things to turn around. With crypto, it just doesn't do that. Things can spark up literally 50% overnight, but it does come with the dark side as well. It can go down pretty substantially, so you really must know what you're doing. And having been inside financial markets for nearly 4 decades, I've created technical analysis to help us to understand the ins and outs of the crypto market when things are strengthening and when they're weakening. And one thing that you will find when you look at crypto, crypto is an incredible predictor of stock market behavior. For example, if crypto is going down, in all probability it's leading or absolutely moving with the major market indices. It can be a leading indicator, and leading indicators are very rare inside financial markets. So it's incredibly good to look at row 1 and row 5, give it a lot of attention. I've also put up some rules here. The reason that we look through the cheat sheet, through all of these charts, is primarily because of rule 448. Your chart is moved by other charts. Your chart may not even be in this list. I call that your money chart. Your money chart is simply the chart that you put money into. Whatever that is, it doesn't matter what it is. The money chart may be just around here, for example. Now, your money chart is absolutely unequivocally hit by the movements and intercorrelations between all of these 7 rows. It does take a lot of time to figure that out, and Rule 447 helps us to understand it. All charts, including your money chart, are intercorrelated and interdependent. That means they all depend on each other. A lot of people just look to the news and say, oh, I need to know what the news is doing. Why did this thing go up? Why did Bitcoin go up today? Charts reflect real-time news. If you've ever done any journalism, you know that it takes time to write the article and then time to send it and time to get it approved. It's not instantaneous. Another reason that we look at the main markets, such as the S&P 500, the Nasdaq, the Dow, and the Russell 2000, is because of Rule 217. No stock market can escape the US's gravity. This is measuring the US's market. So what does that mean? If you're in Australia and the S&P 500 is going nuts, it's just going parabolic, guess what? The potential is the Aussie market will go in the same direction. What about Rule 243? Stocks cannot escape the stock market's gravity. If the Russell 2000, Dow Jones, S&P 500 and the Nasdaq are all cratering, guess what it's going to do to individual stocks such as Apple, Microsoft, Tesla and Nvidia? You got it. In all likelihood, they're going to be cratering. And what about Rule 225? If you go back and remember the yen carry trade, when the major market indices just plummeted, what was Bitcoin and crypto doing? It was plummeting. This means that gravitational pull from the main markets into crypto cannot be avoided. And typically, because crypto is 24/7 by 365, the big guys at the top end of town, they already know what's going on. They're already reducing or increasing their positions inside crypto. So crypto is an incredible thing to look at. Now, what about row 6 and row 7? And of course, all the other cryptos. Rule 45, no alt can escape Bitcoin's gravity. What the heck is an alt? Well, it's just basically anything other than Bitcoin. So if Bitcoin is going up, guess what the alts are doing? They're going up. If Bitcoin is coming down, what are the alts doing? They're coming down. It's so simple inside the crypto market. Inside the main markets, it's really complex. Inside the crypto market, it's so much easier. Rule 268 is a really big one. CTKS structure determines price waves. Underneath every single one of these charts is structure, structural resistance and structural support. When the DXY comes into structural resistance, it tends to back off because it's structural resistance. What did we see with Bitcoin in the last couple of days? There was enormous structural resistance across the entire total market cap of the crypto market. What did it do? It came up, tried to get through it, back, and just retesting it at this current time. When we do the cheat sheet, the proper cheat sheet, we're actually looking at the structural levels across all of these things. The structural levels are available through marking up your charts with level 1 and level 2 standard certification. Of course, marking up Bitcoin and total can take hours, and all of the rest are probably things that you don't want to do. That's why we've got the service. The service has all those indicators, TradingView indicators. So Rule 240, CTKS structure first. CTKS structure is the most advanced, statistically relevant support and resistance levels in existence in TA, or technical analysis. So what we're trying to do when we look through the cheat sheet is to understand first the directional momentum of all of these different rows. That's what I do in the public channel. But in private channels and also inside the service, what I do is to go through the actual structure of these every single chart because it matters. It matters so much. It's just undeniable. A lot of people say, will the market crash? Where is the market going? The charts will tell you in real time. What do you think financial reporters do? They look at the chart and then they hunt for an answer, a potential answer. Charts don't care about answers. There's millions of people buying and millions of people selling. What the charts care about is structure. And what happens when a chart comes up to really heavy structural resistance? It's going to back away. What about when a chart comes into really strong structural support? Well, it's going to bounce. So therefore, your key is to always understand where is the structural support and structural resistance across each of these charts. If you do that, you're in the elite 1%. Okay, with that said, I hope that helps out a lot of different people. What you're going to find is cross-analyzing the charts will give you an interconnected work of art. So says Into the Charts, which is Edwin, our beloved ambassador. To chart or to catch the right signals, you've got to go macro before going micro. After countless trades, Edwin has got one mantra: structure is everything. It's like playing a financial jigsaw puzzle, but the puzzle pieces are made of money. Wow! How cool is that? If you've been finding the cheat sheet useful, or you would like to share some of your interactions with the cheat sheet or structure, please leave a comment in the comments and I can pop it up here. Okay, let's get into the cheat sheet. If you have any questions or you need understanding, a bit more refinement on things, I'm really happy to help out. Just let me know what's useful to you inside the comments. When we look at row 1, we're looking at the VIX, the DXY, dollar-yen combo, government 10-year bonds, 2-year, and oil. What I've done is to put yield curve inversion in here. The US 10 minus the US 2. We can see it's currently uninverted. It was negative or inverted. It's become uninverted. Another measure that people use is the 10 minus the 3 month. We can see the 10 minus the 3 month is still inverted. What I thought we could do today is to just zoom out to the yen carry trade. You can see in August, the yen carry trade pushed the VIX up like nuts and then it decayed. As the Japanese, well, the Bank of Japan and the Japanese Prime Minister said, okay, we're not going to raise interest rates, we'll leave them ultra low. But what happened to Bitcoin? You can see it literally fell from 67 or nearly 68,000 to literally 54,000 when the VIX spiked. Please pay attention. And what about when the VIX goes down? Well, that's pretty cool stuff too. What we typically see is Bitcoin and the entire crypto market, as well as the stock market, going for it. Now, there are sub issues that affect different markets, so please be aware this will not be a one-to-one relationship, but it's pretty damn close. What about the US dollar currency index? Generally, the DXY tends to invert what Bitcoin does, but not always. We have a changing of the guards at the current time where Bitcoin has actually been following the DXY, and this is rather bizarre, but it happens. That's why you can't get caught up with a relationship that used to play out that's, kind of gone the other way. And what we found recently, for example, in the bear market, the yields were inverting Bitcoin's movements. And now the yields are starting to move with Bitcoin as they did in the last bull market. This is actually quite positive. The reason that we look at the dollar-yen combo is because this combo gives us an insight into what the DXY could potentially do. All eyes are on the DXY. Now, how does the DXY relate to the VIX? If people are stuffing money into their mattresses, which is the way I like to look at the DXY, guess what? In all probability, the VIX is coming up or will be set to come up. So we must pay attention when the DXY goes a little bit nuts. Now, what causes this? Well, it's mainly caused by yields coming up. Now, why do yields come up and why have they been coming up recently? A lot of people said, hey, this doesn't make any sense. With the yields just going to be cut by the Federal Reserve, we should be witnessing yields collapsing down. Yields typically collapse down when there's a full scale. Well, I can show you the Japanese carry trade. Yeah, it's a carry trade. That's exactly what happened when the yen carry trade unwound. And potentially it's already done its business inside the markets, but you can never tell, quite seriously. That's just what the institutions say. They say, everything is fine, while they're busy selling. So what we've been noticing here since the yen carry trade blew up, the risk off inside the market has turned to risk on, and we've seen risk on assets, particularly Bitcoin. That's why we need to look at Bitcoin. Even if you don't trade it or invest in any crypto, if you're not looking at Bitcoin, you're making a huge mistake. Larry Fink, the chairman of BlackRock, would be very, very angry at you as well. So we don't want that, do we? Okay, let's look at this. So what did you notice here? When we look at yields, they're currently recovering. You can see it here. We've had a bit of a cut over here, which is showing positive momentum inside the US debt market. Now, this is a bit of a problem for the US because their budget deficit is blowing out and they've got so much debt to GDP, it's going to be really hard to service it. Now, you can also see that the yield curve has uninverted from the US 10 to the US 2. From the US 10 to the 3-month, it's on the way. Now, what does this actually mean for us? When you're looking at row 1, you're looking at so many different things, and you're probably just scratching the surface right now. One of the things that you want to look at is what happens when yield curve uninversion occurs. And this is inversion. This is the center line, 0%, and we've uninverted. Now, typically, uninversion brings problems, so we must pay a lot of attention to this cheat sheet. Oh, that's if you want to keep your money. Let's zoom in to the past couple of days. We've seen the VIX come down, but then it just spiked up. Now, the VIX and the DXY have been playing a bit of a dance that's confusing the hell out of financial markets. Typically, when the VIX comes down, it just rallies everything. But also, the DXY has been going up and down. This up and down behavior has been causing problems inside financial markets because people are doing a flight to safety, which is putting their money into the DXY. And we've seen the ECB cut rates and, of course, the US dollar strengthen on things of that nature. Also, the Fed is lowering the percentage probability that it will cut rates by a larger amount. That's also putting upward pressure on the DXY. Understanding where the DXY is going is very complicated, but we've seen the VIX start to come down. And when you look at this, you can see some very strange behavior inside the markets. I believe the problems that we're encountering inside financial markets are because of yield curve uninversion at the current time. The markets are on edge, and a lot of people are actually quite scared. The real question today: why did Bitcoin put in a stellar rally? And it was stellar, there's no question about it. Bitcoin just went nuts because at long last, the VIX started to come down and the DXY started to come down as well. You might remember for the past week or so, they've been moving in opposite directions. The VIX would go down and the DXY would go up, or they would invert each other and kind of cancel out each other. So the signal is getting a lot clearer if they move together, and that's what we want to see. Okay, we've got a bit of a directional bias in terms of row 1. Row 2, we're going to a daily basis, and we're going back to the yen carry trade. Just keep that in mind. This is when the yen carry trade unwound. It's very important to get a bit of a signpost inside the markets. The one thing that typically occurs as junk bonds rallies, so too does the stock market and also crypto. We've seen a bit of a weakening in the trend just recently, just a week or so ago, and we've been doing an underside retest. If this resumes down, it is not good for the main markets, not good at all. And you can see that the euro dollar has been cratering. Typically, the euro dollar moves in directional alignment with not only Bitcoin, but also the major markets. But again, we've seen this real big divergence occurring. And I think it's really to do with the yield curves uninverting. The Aussie dollar is also a pretty good indicator of when things could go up or down inside the crypto market. If we're taking our headline from Bitcoin, we would expect the Aussie dollar to start rallying, because you can see that kind of directional association is really good. But again, you're getting this divergence because the DXY has been so strong. There is a lot of geopolitical tension around right around the globe. Unfortunately, it's always there. It's not really so new. But when you look at gold and digital gold, they're really actually moving together. And if you want to get some actual physical gold, you should reach out to Purpuratum. Purpuratum is an absolute expert in the gold area. Oh, and if you want to get silver too, you should speak to Purpuratum, and he's a fantastic person. And have a look at silver. Silver is like the little baby brother of gold. It's much, much more volatile. I say the gold is like Bitcoin and silver is like the alts. If you want a bigger percent return, you go for silver in terms of trading. But if you want the best, well, of course, you go for gold. That's why I give it as a #1 prize. And what about copper? You can see that copper is coming down, and also the leading consumer of copper is predominantly China, because China is like the world's factory. And the Chinese market, even though it got stimulated, so much, it has come down, and it's come down pretty hard. From our zoomed out perspective, we can see that there is a potential wobble inside the market. If we get junk bonds to just keep on rallying, that is what we want, believe me. But if it starts to break underneath these levels, especially underneath this level, please be aware. We could get a fair correction incoming. I find personally junk bonds and the VIX to be one of the two best indicators, or two of the best indicators out there. Even if you're not into the Forex market, please keep your eye on what the Forex pairs are actually doing. When you see the euro dollar just being so incredibly oversold and the DXY being so incredibly overbought, a correction is, or a retracement is very likely. The potential retracement on the DXY is going to send things nuts in a good way. This could be something that interacts with junk bonds to push it upwards. So please be aware, one chart hits another chart. Here, we're looking at the S&P 500, so we're into row 3. Row 1 and row 2 are not, unfortunately, that clear at the current time. And you need to deal with it when these things happen. These things happen. What can we do? It's, for example, if we look at the structure of the S&P 500, we know that junk bonds has been just weakening recently. There may be some degree of weakness under the hood in the main markets. But with the rally that Bitcoin put in today, that may change around substantially. So just getting the weather conditions on the row 1 and row 2 is vitally important. When we look at the S&P 500, currently it's doing really well. It's very nicely supported by price and it looks to be breaking out. If it continues on the way Bitcoin has been going, yeah, it's going to break out. And what do we see with the NASDAQ? The NASDAQ is a little bit under stress at the current time. But with Bitcoin starting to go nuts, and you know it's come up quite substantially. Well, we'll get to that anyway. Now, why doesn't it show it here? Ken, what's wrong with your chart? Well, this is the actual NASDAQ in terms of the sleepy one that only opens when the stock market opens. This is not the futures. This is the actual trading. And what about the Dow Jones Industrial Average? When we look at that, that's also looking pretty good from a support perspective. What about the Russell 2000? That's looking fantastic. And look at this directional correlation between the Russell and Bitcoin. Wow. Now, what does this mean? If Bitcoin, because Bitcoin trades 24/7, if Bitcoin is coming up, what do we expect the Russell to do when it opens? You got it. Come up. So, pretty good news. Row 3 is saying, yeah, pretty healthy. Row 1 and row 2 are saying, yeah, be a little bit cautious, but not too bad at the current time. We can see China did an incredible rally. Well, not much. It just came up a little bit, but the news is going to make a big thing out of it. What about Aussie market? Australia, yeah, it just came down a little bit. The UK, yeah. What about the Dow, the NASDAQ? And of course, when you look at the Asian markets, because they're open before the US markets, we can see Taiwan has restaged a bit of an uptrend, and Bitcoin is also doing well. In fact, when you look at Bitcoin in terms of this, it's trying to get above its upward resistance. If it makes it, it's likely to break out to all-time highs. We'll have a look at Bitcoin in a moment. We look into row 4, the individual stocks, because we want to understand if they're supporting or diverging from market indices. And have a look at Tesla. You remember when junk bonds came down? We're witnessing a potential impact of junk bonds here. Of course, there were other reasons for this, but the idea is that you can look at different charts and get an understanding if we're getting support or resistance. Microsoft is looking a little bit shaky. And what about NVIDIA? NVIDIA is looking really quite good. It's looking quite supported. So, what do we say about row 4? So far, so good. All of these charts are on the daily basis since the Japanese carry trade and what I like to call the curry trade. Now, we're looking at total crypto market cap. What's that blue line? That's Bitcoin. Now, what are we seeing right now? Bitcoin is breaking out. Go Bitcoin. Well done. And it got a bit touch and go there. It was literally in a sell arc, and it was looking like it was going to do something like that. And then it said, yeah, I think I'll go up. We can see that ETH, or Ethereum, has been under a bit of pressure of late. It's not doing the same things as Bitcoin is doing. For example, when the Japanese carry trade unwound around here, you can see that Bitcoin has basically recovered to that. Has the total crypto market recovered to that? No, it hasn't. What about here with ETH? Oh, it's quite a long way off. Go ETH. This could be really interesting. If we get follow through on Bitcoin, guess what is going to follow? You got it, Ethereum. So we can see row 3 is a tick, row 4 is a tick, and row 5 is a tick. What about row 6? Let's have a look at Litecoin. Japanese curry trade and looking not bad. Got some upward rejection candles there. Don't forget, daily basis. So we're looking back quite a period in time. A lot of people ask, oh, can the CTKS method predict or help us with long-term trading and investing? Of course, that's really what it's designed to do. I just zoom in on the 15-minute and the daily because kind of we do a daily show, and that's probably a good idea. Now, have a look at Bitcoin Cash. Sort of a second cousin to Bitcoin. What's it doing? Has it recovered to a previous level when the Japanese carry trade unwound? No, it hasn't. So there's a potential gap for it to fill. What about Litecoin? You can see Litecoin is light for a reason. It's doing really well. What about BNB? Yes, it recovered, and it recovered earlier. Now, why do we even look at BNB? Binance is the world's largest crypto exchange. So therefore, when people are interested in getting BNB, guess what they're interested in doing? They want to buy Bitcoin. They want to buy your alt, whatever that alt is. And what about Ethereum Classic? The neighbor to Ethereum. Has it recovered to that Japanese carry trade level? No. Not yet, but if ETH starts to take off, and it will if Bitcoin continues to go up. So that's why we look at Bitcoin Cash and Litecoin to try to gain a bit of an insight as to what is occurring inside Bitcoin. It's a big tick for row 6, but what about row 7? Here we're looking at ADA, Doge, XRP, and Solana, just over a 5-minute period. So this gives us about 24 hours. Now, what are we seeing here? Of course, it's just following Bitcoin's gravitational pull. And we can see Bitcoin has got a bit of laziness in it, hasn't it? Oh, what are you doing? Keep on going up, Bitcoin. You're not supposed to be retracing just because the London session opened and they're selling down and booking in profits. They shouldn't be doing that. They should be driving it higher. Beware of session openings. They're another liquidity factor that you need to bear in mind. But Ken, I want to see from the Japanese carry trade. Got it. Here we go. Japanese carry trade, done. So what are we looking at here with ADA? Oh, it's got a bit of room to move. If Bitcoin starts to have a follow through in its price momentum, and so far it's doing pretty well, if it's going to do that, it's going to pull ADA up because we know Rule 45, no alt can escape Bitcoin's gravitational pull. So, boom, up she goes. If that continues on. What about Solana? It's not recovered yet, but it could. What about Doge? Oh, who let the Doge out? It's doing really, really well. And look at XRP, just like BNB, it recovered earlier, and now it's backed off. Now, can it recover up to this point if Bitcoin keeps on going? Sure it can. This chart is a longer term chart of Bitcoin, and these are retail lines. So what am I doing here? I'm just trying to show you what retail traders and investors will be looking at. They'll be looking at overcoming this specific level. Have we overcome it? No, we haven't, not yet. But it is looking pretty cool. So does this mean up only? No such thing. Up only? Oh yeah, that was here, and that was here, and that was here, and that was here. What is up only? There's no such thing. The market is always moving in a wave-based function. Don't get sucked in to people who just say, up only, down only, permanent bulls, permanent BS actually. Zooming out a little is a pretty good idea. You can see US liquidity is still getting pulled out of the market, even though we've had a little bit of an uptick. There's no change in trend here. It's not like it's broken up and, hey, we're getting funded. No, it's not that at all. What about the VIX? Well, the inverted VIX is like literally the inverse of the VIX. This is the Japanese curry trade. So the curry trade just took Bitcoin and the entire stock market down. Now, what do we know about the inverted VIX? It points the direction of the markets. Now, the markets are pointing down this way, but the actual markets are going up this way. And what is junk bonds doing? You've known it's done a cut under. So what are we doing here? What are we saying about this? Well, treat the upward momentum with caution until junk bonds decides to turn around and the VIX decides to go back to where it should go, which is lower. When we think of row 1 and row 2 inside the cheat sheet, this is on a daily basis. We can see literally before 2023, Bitcoin overlaid by the S&P 500 futures. Do you see a relationship in there? What about the NASDAQ? Bitcoin versus the NASDAQ. Any relationship between Bitcoin and the Dow? What about Bitcoin and the Russell 2000? What about the DAX? What about the Nikkei? What about China's market? I can already answer that. It's a bit of a nutcase over there. What about the ASX? Well, you can see that in healthy market conditions, don't forget China was coming out of recession. In healthy market conditions, Bitcoin and the major market indices, especially inside the US, they're moving together. So that's why it's important to keep your eye on row 3. And to do that, you need to understand row 1 and row 2. Hopefully, you're seeing all of the pieces of the jigsaw puzzle come together. Looking at total crypto market cap from a structural perspective, and you should be doing this across all the row 1, row 2, row 3, up to row 7, because when you look structurally, you understand actually what's occurring. Let's just pop the structural indicator from the service on. What are we seeing here? We're seeing that there was enormous structural overhead resistance that the entire crypto market tried to get out of, but it was just too heavy. Basically, price got exhausted and we almost came down to a lower structural level, but we were saved. What we saw is that we've rechallenged these structural levels. Now, what could happen from here? If we get an exhaustion again, for example, if the VIX spikes, the DXY spikes up, that will cause negative price momentum across the crypto market. So far, we're dealing with support. But we did have a cut under just here, which faked a lot of positions out of the market. These fakes can be very, very nasty. One of the things that you need to deal with if you're a trader or investor is to just actually understand that regret is part and parcel of being a trader or an investor. You're always going to sell too early and you're going to buy too late and you're going to sell into a loss and you're going to do all sorts of things. The only thing that you can do is to learn and to come up with a strategy so next time you get back in the ring, you can score a knockout. Another thing that you might like to bear in mind, because this particular fingerprint is playing across all of the alts, and that's why we need to look at total and we need to understand where structural resistance and structural support levels are. They're absolutely vital at this time. Where could the crypto market go next? One thing to understand, if we break this intermediate support level, just be aware that we could be actually just in something like this. It doesn't mean we are, but we need to keep aware. Now, what are all these dotted lines? Steve and Mary Ellen are very good at just picking liquidation levels inside the crypto market. So I thought I would just do a bit of a helping hand. You can see all of this liquidation, very high liquidation levels around that 68,782 up to about 68,946. It really depends what liquidation level you look at. You could be looking at the 12-hour, the 1 week, the 1 month, the 1 week, the 3 months. You could be looking at a lot of different things. It's probably not surprising to you at all that I look just about at everything because I really want to understand. One of the things that I saw, apart from this cluster around nearly the $69,000 level, there is no massive structural liquidation levels above here. Now, what does it mean? Does it mean it can't go further? Of course it can go further, but it will have to dig in to like the 3-month, the 6-month, the 12-month liquidation levels. What about here? Well, what we're seeing is a clustering around that 66,300 level. But we know these liquidation levels are always changing and trying to just predict where the structure is inside the chart. So what do we need to do? Well, we need to pop on the structure. So let's zoom in and I'll show you what's cooking. What Steve and Mary Ellen like to do, and they're very successful traders as well, Congratulations, SME. What they try to do is they try to marry up the liquidation levels around structural levels. So let's have a look if they're actually at structural levels or somewhere else. So we can see at the current time they're not inside a structural level. Even the 12-hour liquidation at 67,466, that's not at a structural level. The structural levels are down near this bottom, just a little bit above this one. You can see just through here. Getting like a geographic representation of where structural levels are is actually really important, especially if you're overlaying Bitcoin on your money chart. Now, what is Bitcoin looking like right now? We can see upward support, yeah, it's there. So even if we come back a little bit, we're still under a degree of support. So what retail will do is they'll say, so long as it stays above 67,600, everything is fine. But we know it's kind of not like that, really. These structural levels, and especially if you're tracking them in real time, and you may have noticed I set alerts on them. I've turned them off for this video because it's getting crazy. But the idea is that if you set structural levels, you're ahead of the pack. Now, what could we see here? If we dip underneath, retest, and resume downwards, taking out these lower levels, well, that's a pretty low probability play in many ways. Look at all this clustering. If you're a big money player, wouldn't you want to go after all of these hundreds of millions of dollars up here and then do it? One thing to note, when a liquidation level gets taken out, it gets replaced by other liquidation levels. So something just to bear in mind. What we need to do is pass across this 68,200 to confirm that as support. There is a gravitational potential to go to these liquidation levels because they're juicy and they're all clustered together. Big money players will say, very tasty, I would like some of that. So they would get a lot of longs to come into the market. Now remember what is happening with junk bonds, and remember what's happening with the DXY and the VIX. Junk bonds is starting to cut under. Unless it actually puts in a sign of strength, we could be in trouble inside the main markets, but a lot of people won't see it until it's too late. From a probability perspective, a move up to around the 69 is very definitely on the cards, unless they want to push it down to bring more shorts into the market. But that's kind of juicy and they're kind of close, so why not take them out? I'm sure Bereth Soloway is up here somewhere. Oh, poor old Bereth. He does get crashed. I know his name is Gareth Soloway, but we call him Bereth because he gets very bearish. Please let me know in the comments, what way do you think we're going to go? Do you think we're going to go bullish and just take out all these liquidation levels? Or do you think we're going to go bearish? Or maybe something like this or something like that? Please let me know. I think it's really good that you always do your three-dimensional thinking. Remember that the market is just up and down. Look at this. It's just up and down all the time. And the structural levels do give you an incredible insight. Inside the service, there's actually videos in there that will help you to fill out the cheat sheet and help you to explain, or help explain what we're doing here in terms of up and down, momentum, all sorts of different things. The cheat sheet that we do in the public is just one version of the cheat sheet. It's more like understanding from a helicopter viewpoint. But it is really, really valuable. Please let me know in the comments if this has helped you to understand the cheat sheet more fully. Hopefully you can see that there are a lot of intercorrelations and interconnections between the different rows. Row 1 is all about risk, as is row 2. Risk hits the main markets, but also risk hits crypto as well. So please be aware of these factors. Row 3 and row 4 just reinforce each other, as do row 6, row 5, row 7, and row 5. So what we're really trying to do is to understand the risk on or risk off behavior inside the markets and how it's moving across the financial ocean. And if you understand your CTKS structure, you're going to know, just like we saw on Total Crypto Market Cap, all of that overhead structure got flicked back into it, but will it get through it? Well, it may well get through it, actually, because of all those liquidation levels. You can see there's a lot of things that you need to look at if you want to be professional with your specific trades and investments. I would suggest what you need to do is keep a very close eye on junk bonds at the moment. Keep your eye on the VIX and the DXY. The dollar yen just confirms the DXY, the euro dollar inverts the DXY, the Aussie dollar inverts the DXY. And soon we'll be coming into the weekend and it will be crypto only time. Wow, we can breathe a sigh of relief. Have a great day or night ahead, my friends, and Kate and I wish you a beautiful weekend ahead. Bye for now.